Hello, this is Maxime Perrin at Natixis, looking after the telecom sector. Along with my colleague Joe Valenti from PJ Solomon, we're happy to welcome you in this telecom infrastructure panel. It's fair to say that the sector has been pretty active, and we've seen in particular a lot of deals across the pond, across the Atlantic, US investors into Europe. So it's a trend that we see going up in the market. We have a number of panelists around this table. Maybe you can take over, Joe, and go roundtable introductions.
Yes, hi, good morning or good afternoon, depending on where and when you're watching this video. And thank you to our three panelists representing the key subsectors of telecom infrastructure. Today, we're delighted to have Tesh Durvasula, Brady Rafuse, and Tim Culver on our panel. Each of our panelists has deep experience across the various subsectors of digital infrastructure and has run businesses in data centers, fiber, and or towers. So maybe I'll just ask Brady to kick off and start with a quick introduction of yourself and your business, and then we'll dive into the panel after Tim and Tesh do the same.
Thanks, Joe. As you said, my name is Brady Rafuse, and you said it right, which is why I'm on the panel with you. Thank you very much indeed. EuNetworks is a bandwidth infrastructure company in the EU. We own and operate 17 metropolitan networks across Western Europe. Then we have a high-capacity backbone that connects 51 cities in 15 countries. Part of what we do is data center connectivity. And we have around 430 data centers connected to our network now.
Thank you, Brady. And Brady's the CEO of EuNetworks. Tim, maybe over to you.
Sure. Thanks, Joe, and thanks for having us. So I'm Tim Culver. I'm the executive chairman of Phoenix Tower International. We own and operate 9,000 plus towers in 15 countries. We started in 2013, so have grown substantially, mainly in Latin America. About 1,000 towers in the U.S., 8,000 towers in Latin America, and growing in Europe through various transactions that we've completed or completing now. About 250 employees worldwide, and backed by the Blackstone Group and John Hancock as our equity investors.
Thank you, Tim. Tesh?
Good morning, Joe. Good morning, esteemed panelists. Thanks for having me. Former CEO, president at CyrusOne. CyrusOne was a global operator of data centers with approximately 50% of the revenue coming from the hyperscalers and 50% coming from the high-end enterprises across the planet. Went public in 2012. My background started in this business in telecommunications in the late 90s, fiber optics through 2000, and data centers through the last decade and a half. Seeing as the golf courses aren't open yet, this seemed like a really good place to spend my time this morning with you, Joe.
Thank you. Thank you, Tesh, Tim, and Brady. Tesh, maybe I'll just we'll stay with you. And there's an obvious question that we'll kick off with, given the pandemic that is plaguing the world at this moment. There are many subsectors of the economy that have been meaningfully negatively impacted. That's not the case for digital infrastructure. You know, Tesh, maybe just to give a little bit of flavor and background, particularly as it relates to the data center sector. You know, how do you see the pandemic impacting data center businesses broadly? Is it a long-term trend that's going to accelerate the activity that was already happening, or is this just a kind of a near to intermediate term growth uptick that will be more muted going forward?
Great question. So first off, you have to admit, and I think all of my colleagues would agree, that the industrialization of all of the internet infrastructure, fiber optics, data centers, towers, all was on full display over the past 7 months, and 8 months, we would not have been able to get through this pandemic without the infrastructure performing as well as it has pretty much globally. We have not heard of any major issues with the capacity and the infrastructure. So what has that caused, right? You had a complete reallocation and rethinking of the investment. People who are in other food groups have now started looking at all this digital infrastructure, and that's just telling you how uncreatively some investors were thinking out there. And what we end up with now is you've got an unbelievable amount of capital chasing all of these food groups, whether it be towers, whether it be data centers, whether it be fiber optics, trying to come in and say, how can we participate in this? This is fantastic for the industry, fantastic. You're with more capital, gets more innovation. We're going to get faster speeds. We're going to get better technology across all of those major infrastructure platforms. I don't think the trend has any signs of slowing down. In fact, with the pandemic, you've had a generational shift in so many subsectors, whether it be education, distance learning, commuting. You're going to see. I don't see this slowing down at all. I see it only getting faster.
Thanks, Tesh. Brady, what do you think? How has your experience been at EU in terms of the last 6 to 7 months?
It's clearly been a challenge, Joe. We're operating in 15 countries where waves and peaks and troughs and flattening sombreros and something about camels the other day from our Prime Minister. The demand at the top end has been really profound. On the enterprise side, up and down, complicated, media and broadcast. If you were due to broadcast a big event and the big event didn't happen, that's obviously a different outlook from the one that you had anticipated. But I agree with Tesh. I remember someone once said that you look at progress and you look back and you think, oh wow, that was amazing, but everything's going to have to slow down. And I read a book where the guy said that the internet is the size of a golf ball today, and tomorrow it's going to be the size of the sun. And its proliferation, its integration into every single aspect of society comes back to infrastructure at some point or other. And I think it's been pretty profound acceleration in terms of how capital has come to this market, what sort of capital it is. We sit in an infrastructure fund alongside all of those traditional infrastructure type investments who's been there for 100 years. So, managing a company across 15 countries in this environment is not without its challenges, but from a demand perspective and a consolidated perspective of how I see where we sit, I believe that's been a positive aspect for us.
Thanks, Brady. And Tim, you've got operations not only in multiple countries, but multiple continents. How has the impact specific to towers been over the course of the last 6 or 7 months? Certainly valuations in the public tower space suggest demand is quite high, and these assets are highly durable.
Yeah, so thanks, and I would agree with both Tesh and Brady that the rest of the world has woken up to the backbone required to run the internet and mobile telecommunications and all the things and all the kind of basic stuff you need, fiber, towers, those things. People understand have to be there and I have to work. And you're right. Over the last 8-9 months, the values of towers has only gone up and increased as people newer people began to realize the nature of what towers do and what they are and how important they are to the overall mobile network. With regard to operating, we've actually, it's been fine. The networks, our customers, everybody in all the various markets we're in 15 countries have performed, and it's only gotten more important for the infrastructure. We've seen additional lease up, we've seen additional growth. And with regard to COVID and the employees, we had already kind of had a decentralized model. All our employees had laptops. We didn't miss a beat, amazingly, in terms of work in our production for all our 200 plus employees. And that's been pretty amazing. And that's because they're using the backbone that we're providing and Brady and Tesh and others provide. So I think you'll continue to see people understand that these infrastructure assets continue to be the key part of it, how the networks work, how they operate, and we're, and towers, we like to say we're just like dumb steel guys, right? We just own the steel that smart guys put antennas on. And I'm okay with that. So it's been a good run, and we continue to believe that will continue. The only thing I would say is, a lot of money's chasing it, but in the end, you have to serve the customer. And in our world where we do a lot of sale leasebacks, or we do a lot of long-term relationships with customers, that ability to know that you can deliver for the customer long-term is important. And so what I've seen, and doing this for 20 years, a lot of guys will chase with money, but in the end, you have to be able to show your customers, and in our case, the wireless carriers, that you're a long-term partner who can deliver them the service they need. And I think you'll begin to see that separation as people chase these deals going forward.
So it sounds like it's good business for bankers, obviously, as well. And thank you guys for helping us.
We're just here for you, Maxime. That's I get up every day. That's my goal.
And so I think one feature of the market that we see is that there's more and more investments cross-border, that people expand, go into new regions. What drives that? And maybe Tim, you can start. How do you see that? You just recently crossed the pond to come invest in Europe. You've done 2 deals from LATAM and US and Caribbeans. So it's a pretty, I guess it changes your life in terms of traveling. So why that? Why that?
Yeah, so again, we started, Phoenix Tower started by taking Casavano. He and I used to work together in another company, and we started from day one as an international tower company. So our first deals were in Latin America. And as we grew in Latin America, we like to do deals in markets where we could be a leader, where we can really be in the inflection point with the customer in an important way. So and then we did some deals in the US. And as we looked around, we saw Europe as a good counterbalance to our portfolio in Latin America. Strong carriers, long-term growth, long-term relationships, strong currency. We get paid basically in dollars in all our markets. So we're very focused on currency. And so Europe represented for us a market that, we thought was underserved by independent tower companies, and a way for us to differentiate and provide the customers an alternative landlord and somebody who could provide best service to them. And so that's how we view Europe and continue to grow, and we continue to grow in Latin America. We're basically kind of out of countries in Latin America to go to, quite honestly. And so as we looked around where else to expand in the world, Europe was an obvious choice.
And the interesting feature in Europe is you've gone alphabetically, starting with France, then
yeah. We only work alphabetically.
Then Ireland and Italy, maybe, and others. So.
Exactly.
Okay.
Exactly.
Maybe moving to other panelists. I don't know, Tesh, whether you want to comment on the data center scene and the expansion of capacity in Europe and how you see that playing. And
yeah, I think Tim hit it on the head with his earlier comment about making sure you're satisfying customer needs and having customer solutions. And the phenomena that's happening now is that there's just a huge concentration in global compute and storage amongst the hyperscalers. And if you want to talk about that predominant 5, there's probably another 10 to 15 below that are starting to make some waves. But in the data center infrastructure business, 5 names have dominated the last 5 years. And it's the same names on a planetary basis. Whether you're going to Sydney, Australia, or Dublin, Ireland, or Dublin, Ohio, you're still talking to the same 5 folks. And that concentration has helped in terms of making sure that the solution is is customized for the end user, and also that you're not, and this goes back to your banking comment and the capital comment, is you're not stranding capital, right? We've all been around long enough. I've still got the scars on my back from the late 90s when there was lots of infrastructure and the applications weren't there, the use cases weren't there, and that's not the case right now. In fact, if you think about this, if you tried to have this, if God forbid this pandemic happened 25 years ago, what shape would we be in to handle it? And we're currently in a much better shape, and that's what I meant by the industrialization of the internet. In terms of the continuing of the data center business moving kind of east, if you will, North America is definitely more mature. Europe seems to be the big land of opportunity, and given what you've seen in Asia and Australia, I think there's going to be a lot more capital, a lot more data center infrastructure happening in those two continents as well.
Maybe just
and Brady, yeah, go on.
Sorry. I was just saying, maybe to follow on there quickly and point a question toward Brady related to the cloud providers. Your business, Brady, provides a lot of macro interconnectivity between data centers. And given Tesh's comment around the consolidation of the cloud providers and the power that they wield, not only at the top 5 but maybe the next several, what's been the dynamic around your ability to serve those customers and do so in a reasonably profitable way? You have on the one side demand profile going up meaningfully, on the other side a consolidation of power from a buying perspective amongst a small group of very important cloud providers. What's been that interaction in terms of serving those customers and the long-term profitability of serving that base?
I guess I think it's always been so in my experience, Joe. I mean, if I think back to my time in concert, the big enterprises wielded a lot of power. I mean, level 3, I think back to AOL or people like that and how much power they had relative to us. And I mean, the important thing is you stay focused on them. You need to understand what it is they need, and you need to constantly deliver and meet and exceed their expectations. And I think that's where we try to focus. Does price compress? Yes, price compresses. It's always been so. Back in concert, I used to work for David Dorman. He just said to me one time, look, I've never lost a deal on price that I wouldn't die in a ditch for 6 months later. Now, it might be 6 weeks, 6 days, 6 hours now, but it's the nature. I think there is an understanding that to build a long-term relationship with a supplier, that you don't need to nail them into the ground, that you do understand that they need to build a profitable business too. And I'm very comfortable with the partnership type approach. Certainly, it informs a lot of how we think about developing our business. And I think they also recognise that 15 countries in Western Europe are not like 15 states in the US. They're different, and doing business in Paris is different than Milan, is different from Madrid, is different from London, and it's all different in a pandemic.
What are some of those key differences around doing business across those various geographies? As you think about prosecuting various opportunities, what would the key things that keep you up at night that are different across those areas?
Well, I think we're down in the dirt. It's we're digging up streets, we're getting wayleaves, we're getting permits, and how you do that in Frankfurt and how you do that in London is completely different. And how you construct your networks, how you try and meet customers' expectations relative to the environments you're in, you need to be there. We do a country call every second day, and you'll be hearing about critical infrastructure permits and how you get here and how you get there. So I think each market has a very different feel to it, and you need local people to really understand how to interact with the authorities there and and prosecute what it is you're trying to achieve. I don't know better how to say that.
I think
I would add to that I was
Go
just
ahead.
going to add to that the EU, given the press and the importance of ESG and sustainability, the EU is probably 2.5, 3 years ahead of North America in many of its initiatives, and each country is taking even a bigger role in those initiatives. So I think as you're a North American company thinking about going into Europe, you definitely have to have a better eye for your emissions, your all of the things that you're thinking about on an ESG perspective.
I think you guys have given kind of a perspective on the globalization, at least global clients and global trends. At the same time, we see local features of markets, and certainly bridging the gap between the two is not necessarily easy in terms of managing a business. How do you see that, for example, Tim, on your side in the tower space, that that there's an amount of things you can do at the global level that you can neutralize. There are other things that you do more locally, and how do you balance the two?
Yeah, so similar to Brady's description of getting permits at a local level, we have to do that for every single tower. And that permitting process is the same throughout all 15 countries, in the sense that it's never goes smoothly. So there's always issues and regulatory issues and non-regulatory issues and community issues you have to deal with. I think on the flip side, we have global clients. So Telefonica is a great example of a client that's in almost every market we're in but the US. In Latin America, we have Claro, who's in almost every market. And that's helpful in terms of being able to provide them a global level of service that can be helpful at even a local level. But in the end, you've got to get the tower built, operating, and owned and operated correctly in each market, and that requires that simple, just day-to-day work. I would say Europe probably is better regulated. The stability of the regulation in Europe is, in my mind, helpful, and the regulator in Europe is quite active, as compared to other markets where it's not as active, and therefore the vagueness can be a problem. But again, it's operating the towers day to day just requires the people to be there and do it. We have actually centralized a lot of our back office work to allow us to scale, so that happens in a centralized fashion. But we still have techs and other people in the field in each country, salespeople in the field in each country to service at a local level. I
don't know whether other panelists want to comment, or maybe Joe, you want to say something. But how do you see that playing? Because indeed, it sounds like the industry is a bit in a transition, like globalizing but still local features. Will it stay like that? That you just have to manage both angles, at the same time, local and global, and trying to mutualize some costs, but at the same time, be aware of very local specificity. I don't know whether Tesh or
yeah, I think that's right. I think especially for all of us, they're high capital items, right? Laying fiber optics or building data centers, these are big capital dollars. They do take a lot of time, but I would tell you that you're somewhere between 75 and 85% standardized, and there's some percentage, 15 to 20%, that is localized. So if a gantry has to be built differently in London than it does in Frankfurt, that part of the design won't impact speed, because again, Tim's right. We all service very demanding customers, whether it's the consumer base, the end user, or the hyperscale cloud provider. They don't tolerate bad service. Look at. I think we all have used at least 3 different video conferencing platforms over the past 5 months, and 9 months ago, I'd be challenged if you guys could name one. And so here we are. It's now become part of our lexicon, and it's just that fast. And so I don't think that you can, because the customers are uncompromising, we as service providers have to continue to make sure that localization or that customization piece still exists. And that's difficult sometimes in high capital projects.
And perhaps Brady, focusing on Europe, indeed is a different feature of a continent because you have different countries and very local. You've been operating in all of these countries for quite some time. So how do you see that playing on your side? Local differences versus unified approach, basically.
Well, I think as Tim said, I mean, we have global, i.e., company-wide process. We have centralized operations in terms of back office, etc. We manage through the same system end to end in our business. But the feet on the ground, the relationships, etc., are very important. I'm always getting encouraged by people like, you should do this, or you should go submarine, or you should go to America, or you should do this and do that. And we're strong convictions loosely held. We're stick to doing what we do. The demand is there. I think that the way that networks are developing, that we've got plenty to do. And we've got little things like Brexit and the like to get our head round still. So that we're not without our challenges. Certainly, we're always pushing edges, but the idea that we'd go do business in a place that we didn't already border would be a massive surprise. And as we've said, we're very heavily influenced by our customers and how they think and what they think about where we go and what we do is very important. If when we were thinking about Scandinavia, it wasn't really that complicated. Clean power, cold, progressive government, it seemed to all make a lot of sense. As you move into Central Europe, it can be complex, and as we know, their availability zones can. At PTC could be these, and by the time we got to ITW could be these, and that's the nature of demand. And so we just have to roll with that. So we do expand. We bought On Stage in Vienna. We weren't currently doing business in Austria, but you know what? If you look at the Equinix Interconnect Index, they're in the top 20 cities in the world. It made a lot of sense. And now out with FLAP-D, so out with Frankfurt, London, Amsterdam, Paris, Dublin, I think we probably have, it's probably second or third market in terms of 100 gig wavelengths coming out of Vienna in a year or so. So combining those things is important. But again, going into adjacent businesses, moving up the stack, going submarine are not things that we are contemplating.
Well, you've all stayed fairly true to the core in terms of what you do, but maybe slightly different approaches around global expansion. And Tim, you said up front in your comments around the business of PTI being built as a global company from the start and leveraging kind of core back office infrastructure. Do you think that's a different dynamic amongst the tower business, given the importance of network adjacency for Brady's business and efficiency, or is that just a different strategy that you guys have decided to prosecute around being in various global markets?
Well, with regard to towers, in comparison to other tower companies, we had the advantage of being new. So we could, we didn't have any legacy, so we could figure out how we wanted to do it. The previous company we worked at was really in the U.S. and had some towers in Mexico, Costa Rica, and Panama. And so what we did not want to do was be a U.S. tower company that then decided to go to Latin America or then decided to go to Europe, because we said, look, we're going to look for the best deals no matter where they are, as long as they, tick our boxes for strong carriers, strong currency, strong law, those kinds of things. And so from that, we grew and we had a base of operations in the Dominican. That's our largest market. And we've put a central office there because it's where we have the most amount of towers and we get great people. And so we do our back office from there and are able to, we think, efficiently service the markets that we go in. But we still have local people, and you have to have local people who know the RF guys and the guys that operate the towers and the contractors and all those things. So we are able to do both. We think we're more efficient than the other tower companies, but I can't really say. But our business is different than fiber and data centers in that sense. But we've tried to, where possible, leverage the platform so that we could expand quicker and be able to service the client well.
Tesh, there's a trend that seems to be evolving where large infrastructure funds are backing management teams for effective build-to-suits, particularly going after the hyperscaler opportunity, whether it's in Asia or there's some businesses in Europe. How do you think about the ability for those new entrants to compete on a global scale where you've got big present global companies with deep pockets that are out there trying to go after that same business? Is it just such a demand wave that there's room for everyone, or is the party going to end poorly for somebody?
Well, I think there is, first off, I do believe that all of those companies and all of those infra funds have a basic commonality, which is it's a demand thesis, right? They believe the demand is insatiable and it's just never ending, and it'll just continue to grow up and to the right. So, and we haven't seen any evidence that it's going to slow down yet, right? It might be lumpy, but the growth, if you look at all of the big, even if you want to extend, someone said, past the big five and go to the next 15 or 20, everyone's up and to the right over the past 5 to 6 quarters. So I think I still think that's the trend. They don't need our money. Right? So Microsoft doesn't need KKR's money or Blackstone's money or anyone else's money for that matter. Neither does AWS, etc. So it's a question of, do they have good land? Do they have do they have good connectivity? And right now that there still seems to be enough market for everyone to participate in. You've definitely seen a shrinking or a downward pressure on rates. And as more private guys can be more creative off balance sheet, they can continue to do that. And then, but the public guys aren't losing any acquisitions that they don't want. I mean, if you're trying to compete against Equinix or Digital's balance sheet, they tend to win out. So if I see this out, I think there might be some casualties. Some folks might have gone a little too far out on their skis on a piece of land or built too much shell before they got started, before they had a client, before they had a lease, and that might happen. But generally speaking, in the last 3 years, if you look at what's happened, Cyrus acquired a business called Zenium. Franek is a great entrepreneur, built a couple of small sites in London and Frankfurt, and he was able to flip out of those to us, and he's I understand raised more money, and he's about to do it again. So, and there's lots of markets that have not been penetrated by the big guys. And if you kind of look at what Robin did with AirTrunk, there's a good example. Zurich does not have Warsaw. There's lots of cities that still need a good operators in, and I think capital will find those.
Perhaps discussing your M&A strategy, because we've discussed the global and the local aspect, and say you want to tackle a new market. How does it play in terms of your strategy? Basically, saying you're going to go from scratch with things you've done in other markets, you're going to reapply in new markets, versus perhaps acquiring local competence, perhaps acquiring a local platform, for example. So is it more that you do new developments from scratch, or sometimes you could envisage, for example, acquiring a platform, do a small platform in a geography to facilitate the process and have the local contacts? How do you see that playing? Maybe, I don't know, Tesh in data center industry, there's been different approaches. There's been people doing developments from scratch. There's also been, for example, smaller platforms being acquired by larger players just to have a local base. How do you see that playing? Tesh or Tim, whatever.
I'll let Brady or one of the other guys go first. Feels like I've had the mic for a while.
Tim, you want to take that?
Sure. I mean, I think for us, we look at M&A based, like I said, on is it a country we could be in a leadership position on? Is there a transaction that puts us in that position? And can we grow from there? I would say over half our transactions where we went into a country were through a sale leaseback with a customer. So that gives you automatic scale in that market. We don't generally buy a platform and then do it. We would find assets first and grow. And again, we have certain parameters that we look at with regard to the country and whether it's, whether we can have a leadership position, scale, who the customers are, what the growth profile of the country looks like, currency, how we're going to get paid. We find that to be important. And that's how we think about it. And so we do have a box that we've, kind of lived in and that's led to the growth. And then we do generally get some people if we do a sale leaseback from the companies, and that's great because they have a lot of institutional knowledge. And then we hire as we grow and acquire. And as honestly, and I'm sure others could say, as we've gotten bigger and more well known, it becomes easier to recruit people to come work for you. When you have very little, it's hard, but as you get bigger, attracting good talent, which is an important part of this, gets a little easier.
Maybe Brady, how do you see that in the fiber space in Europe? Consolidation of smaller players, bolt-ons, or more building from scratch?
I think a bit of both. The equation that always sticks in my mind is good company plus bad company equals bad company. And you always have to be cognizant of that. And I think there's always opportunity to make money. But from my perspective, I'm always looking, what is the source of long-term competitive advantage? What is the structure of a market? And as far as I've always seen, that as you look into long-term of the market, you have one or two really big guys, then you have niche players, and if you're caught in the middle, then you need to go one or either way, or you're gonna be in trouble. So Tesh makes a really good point. You can make a great opportunity if you can find some power, if you can find some land, and you can work out some technologies that make availability zones bigger or whatever it happens to be. We genuinely think about fiber to the field. We genuinely think about where we know that there is pockets of power and land available before transactions are even done, where we're thinking about how we construct and how we get there, et cetera, et cetera. So I think an important bit as well is there is a lot more construction in fiber that people. I think there was the bubble that occurred, but as I keep trying to tell people, that bubble was in the last century. And if you're a big hyperscaler who's investing billions in Dublin or Amsterdam or wherever it is, and then you're thinking about how you connect those things, buying stuff that was built in the last century and hoping it's going to last for another 20 years perhaps isn't as sensible as it might be. And there actually genuinely has been some emergent technologies and the technologies have moved forward. It's not been suddenly this happened. It's not suddenly the difference between analog and digital, but as we look at we constructed from Dublin to Lowestoft and to London last year with a completely brand new route, which was a really big deal for us, and the fiber type, ILA spacing, all this stuff, which is, I accept, dreadfully boring, but that's what we do. So we'll always look at tuck-in acquisitions. The days of the capital city in a country being what you cover and then you move on is just not the case. And increasingly second, third, fourth, fifth cities in countries become important, particularly if you take somewhere like Germany, incredibly federalist country, incredibly spread. So we're always looking at those type of things, and increasingly, as I say, it's not just looking at the flat D cities; it's all over the place. Transformational M&A in terms of this huge deal or that huge deal, we'll always be around the rim, but good company plus bad company equals bad company, and we've been doing this for 12 years, and I really don't want to do a 5-year integration that just grinds everybody to death.
Maybe that's a good transition as we're wrapping up toward our time here. I'll ask each of the panelists to comment on this. If you think about, over the next number of years, the biggest risk in your company or subsector and the biggest opportunity set, where would those be? And maybe Tim, I'll start with you.
Sure. I mean, I think the biggest risk is, to Brady's point, as we continue to grow, we've been an M&A growth-focused company and making sure we're doing deals that fit within our parameters. So for us personally, I think our biggest risk is feeling like we need to do deals, but that don't fit our parameters. So we spend a lot of time making sure we're being disciplined on what we do. In terms of upside, I think obviously as we talked about, the pandemic and everything has shown just the incredible long-term nature of these assets and their importance and all the things that the customers require. We're here to provide, and I think over the long term, we'll only get better.
Well, first, thanks, Joe, for hosting this great conference, and thanks to my colleagues. Really did learn quite a few things. I think the two things that I'm most looking forward to is the social responsibility that all the companies are taking going forward. Never in the history of the planet have you seen so much conversation and dialogue around what it is to make sure that the data center is green, that we're using less power, that we're being efficient, not only for the planet, but for the people, for the communities. And I think that part of what's happening in our infrastructure and our sector is really fascinating to me. I think it's a huge opportunity to close the gap between the folks on the planet who obviously want to participate in the global economy, but need connectivity to do that. So, whether it's Tim's assets or Brady's assets or my assets, they're going to get to participate over the next 2 decades. And I see every CEO, every company thinking about it in such a great way now that it just wasn't being thought of that way 20 years ago. So this evolutionary process has been something that I've been sitting on the sidelines watching now for a couple of months, and every company I talk to has got a new initiative around how to close that digital divide. So I'm looking forward to seeing that continue to evolve.
Great, thanks, Tesh. And Brady, last words on that.
I couldn't agree with that anymore. I think contributing to the communities in which we operate is an incredibly crucial part, and that responsibility and the joy that it gives you is incredibly important. And I understand it from a planetary level. I was talking about our apprenticeship schemes, all sorts of things that we do. From a business perspective, I don't want to say 5G and I don't want to say IoT and I don't want to say any of those things, but where the edge goes, I think is an incredibly important opportunity. Whether that means a lot more data centers or it means a lot more towers or it means a lot more anything, we'll see. But I think that's critically important. And obviously the biggest risk we face is what you do, Joe. It's bankers getting too much capital, running at too many opportunities, and everything blows up again. So I always get up every morning and every night and say, remember, never trust a banker.
That's a fair and appropriate I will commit to trying to stay in our swim lanes, good companies, buying more good companies, and creating better companies. So, well, with that, I want to thank my partner Maxime and certainly our panelists Brady, Tim, and Tesh. You guys were all incredibly generous with your time, and I know you're all quite busy. So, on behalf of Natixis and PJ Solomon, thank you for your participation. And and look forward to spending more time together going forward. So thanks again, everyone.
Thank you.
Thanks, guys. Thanks, Tesh. Thanks.
Cheers. Cheers.